Back to that tussle for the EU's top jobs, and the finance world was most closely watching who would be selected as the next chief of the European Central Bank. And our business editor, Stephen Carroll, is joining us with a little bit more on that tussle.
Stuart, of course, Christine Lagarde, very well known to the worlds of politics and finance as her role as head of the International Monetary Fund. It is now her name that will go forward to be confirmed by the European Parliament in this process. Christine Lagarde is a lawyer by training. She was a key figure, though, at the centre of the Eurozone crisis while at the IMF. Previously, she served as French finance minister under Nicolas Sarkozy. But her record isn't blemish-free. In 2016, she was found guilty of negligence over a compensation payout to French businessman Bernard Tapie, but was given no sentence as part of that legal process. Now, one of the major criticisms that's been levelled at Christine Lagarde's nomination is that she's not an economist. That's in contrast to the three previous ECB presidents. But two recent appointments will boost the technical expertise of her team. ECB Vice President Luis de Guindos and Chief Economist Philip Lane, these two men here, that's Mr Guindos and Mr Lane, both experienced economists. De Guindos was the Economy Minister of Spain before he joined the European Central Bank, and Philip Lane was the Governor of the Irish Central Bank. So she has a team of economists behind her at the ECB. Now, together, there are plenty of challenges that they will face in the European Central Bank. Growth in the Eurozone is sluggish and inflation is well below the bank's 2% target, just 1.2% estimated in June. The tools that the bank has to manage the Eurozone economy are limited as well. Interest rates are already at zero, and the bank only recently wound down its crisis-era bond buying programme. There are structural issues to be addressed for the bank too, not only because it's a currency zone that doesn't have a unified budget or tax process, but also because progress towards banking union has been slow. And it's been argued that some element of risk sharing among members of the Eurozone will need to be introduced to face the next crisis, a controversial topic that will land on the new president's desk. Well, if we needed a reminder of the challenges that have come for the banking sector in Europe, we have a warning from the European Banking Authority that the largest lenders in the EU will need an extra 135 billion euros to meet post-crisis capital rules. These new rules are being phased in from 2022. It would represent an almost 1/4 increase in the amount of safe assets that banks will be required to hold, and that could put major pressure on some European lenders which are struggling with stagnant profits. OK, let's check in on what's happening on the markets for you next. We had another record close on Wall Street on Monday, but it's a muted open for the European markets today. London up by 0.25%, Paris and Frankfurt also just nudging into positive territory. Oil and gas shares trading down today. That's after we saw oil prices tumble on Tuesday over fears of slowing demand. In Asia earlier, we saw falls across the board, the optimism over the US-China trade talks wearing off as the week has gone on. The Shanghai Composite down 1% a short time ago. Here in France, farmers have been protesting over the new trade agreement the EU has signed with 4 South American countries, which make up the Mercosur bloc. They're unhappy that tariffs have been cut on imported food and say it'll hurt their livelihoods. Erin Ungunkaya reports.
A show of collective anger in front of some 40 government offices across France. These farmers are protesting the free trade agreement between the EU and Mercosur countries, which would open up the European market to 4 Latin American nations.
They're trying to kill us off. It's unacceptable. We won't accept it. We're against it. We're going to fight, and tomorrow we'll still be here.
The source of their concern, massive imports from South America. Under the deal, Europe would reduce tariffs on 99,000 tons of beef imports, representing 1.2% of annual EU consumption, and on 100,000 tons of poultry, representing 0.7% of annual EU consumption. French farmers worry the agreement will threaten their livelihoods.
The cost of production for French farmers is higher than that of South American countries. We can't compete, so we'll disappear.
French lawmakers on the left, right, and even in the majority Republic on the Move party also expressed concern in Tuesday's parliamentary session, with Agriculture Minister Didier Guillaume attempting to dispel their doubts.
I will not be the minister who sacrifices French agriculture to the international trade agreement.
The EU-Mercosur trade agreement will only kick in once it's ratified by the European Council and passed by both EU and national parliaments, a process that will likely last several months.
Well, that's all the business news for now. Stuart.
Thanks a lot, Stephen. Stephen with business and